Good morning. Welcome to Stock Market Today. It's Wednesday, October 28th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where we get a lot of the great content for this show. We also give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities mostly lower in Tuesday's trading, finishing just off the session lows. The Nasdaq was the only major average to close higher on the day yesterday. Treasuries were bid with the curve flattening for a second day in a row. That to me is a flight to quality type situation, as well as the dollar. Dollar was actually weaker on the major crosses, but it's bid here this morning. Gold finished up 30 basis points. WTI crude finished up 2.6% after being down more than 3% on Monday. So yesterday was kind of a choppy day where depending on how you were positioned and what you were looking at, it was either bullish or bearish. I mean, I can tell you that for me, from my perspective, what's in my portfolio, yesterday was a fine day. But I have some exposure to Nasdaq type situations. So outperformers, discretionary, comm services, and tech. Underperformers, industrials, financials, and energy. As we get to the desk this morning, S&P futures, there's no question that they're bearish. They're down 1.3%. That's after Asian markets were mixed overnight. China, Australia, and South Korea all higher, but Japan and Hong Kong were weaker. European markets are under pressure once again. There's an interesting dynamic that we're going to delve into today. Whereas the U.S. has been choppy for the past, call it almost 2 months, Europe's been under pressure. And those are the two regions geographically that are seeing a spike in COVID cases. What's interesting to me is I look out at the Asian markets, and the Asian markets are trading near 52-week highs. And we're going to look at emerging Asia Pac a little bit later on here in the show. And we're not reading much about cases spiking there to levels that would warrant additional restrictions or shutdowns. So this is the dynamic that we're living with now. And this is the dynamic that could impact markets in the near term. I think it's important to be mindful of them while also taking a step back, which we're going to do right now as we look at the major indices. All right, so I know everybody wants to get bared up, and it's easy to get bared up, and the news is bearish, and we have an election, and we have catalysts, and I don't guess at it, right? I don't know what's going to happen. I have no idea how any of this is going to play out, and I freely admit that. I only know what I see. I only know what's playing out. I only know what I talk about here on this show and what I read. What I read generally drives the narrative, and then it's a matter of, does the market confirm that narrative? And the narrative for the most part is mixed, right? There are a lot of moving parts. There's some signs of growth in the global economy, but we still have COVID and cases spiking. We've seen an uptick in economic activity and economic data points. At the same time, there are fears that a spike in COVID could kind of diminish that. Right. So that's the narrative. And it is actually playing out in the market. The moving parts are playing out in the market because the moving parts are pulling in different directions, in my opinion. And what do you see here in the markets? Well, I see SPY consolidating after making a high in early September. Right. Has it broken down yet? No. What I see is this kind of zone of support, and it is wide. In fairness, we need to look for opportunities to narrow it, but right now that's what it is. 340 to 320 to the downside is support for the SPY, right? Until 320 breaks, in my opinion, this is just a consolidation within the context of an uptrend. Qs, same story, right? 260 to 280, right? Until 260 breaks, this is just a consolidation within the context of an uptrend. And then call it 140 to 160 on the IWM. That's it, folks. How you choose to trade or invest in that environment is a function of your time frame, your risk appetite. Are you a day trader? Then you're paying attention to all these puts and takes day to day. If you're an investor, longer term, probably not doing all that much, except if you have cash, I think it makes sense to be looking for bullish opportunities because we are oversold in the support zone within the context of the uptrend. It's really about you knowing yourself and then putting the market within the context of the current narrative. Let's take a look at our market in a minute now. Nasdaq bucks the trend, close higher on the mostly down day. All three major market ETFs are now oversold and in support zones. That's by our work. You can read it in my note when you take the trial. Options trades remain dogmatically bullish, right? The put call ratio, equity only put call ratio remains dogmatically bullish, but the VIX is moving higher into the election. Futures, as I said, point to a lower open here today. Now, our market in a minute also includes what's happening from a power bar perspective. And power bars are painting a slightly more bearish story. Remember when I said puts and takes? They're everywhere in this market, which is reflected in the choppy trading, right? The Dow, 1 to 8, bulls to bears for the ratio after the Dow lost 80 basis points yesterday. S&P 500 loses 30 basis points, 113 to 121. So that ratio flips bearish. Nasdaq up 80 basis points yesterday. Call it 21 to 19. So that has deteriorated over the past couple of weeks. Small caps underperformer on the day, down 86 bips and a deterioration in their ratio. Flight to quality sends bonds higher, yields lower. According to the Chaikin Power Bar, small cap stocks are more bullish than large cap stocks. Major markets are mixed. It's our stock of the day. Speaking of Asia Pac, I'm seeing some interesting setups in the names levered to China. JD, Baba, just to name a few. I think it makes sense to be looking at these stocks. Why? Well, bullish ratings, strong trend, strong industry group, bullish money flow, massively outperforming the S&P 500, right? So when we're thinking about stock selection, you want to see that outperformance, but I also like to see it within the context of a theme, right? And the theme that I've been noticing, I talked about in a couple of notes this week for our clients, is this strength outside of the US, in particular in Asia, right? So we take a look at JD, bullish, up nearly 2% yesterday, and now it's oversold. To me, that's the setup I'm looking for. That is an interesting setup. Take a look at a name like Baba as well. Now, it's not as oversold. Baba's just entering oversold conditions, but it's also already broken out of its consolidation as opposed to JD, which is kind of in this consolidation here. So how you choose to play it is a function of how you invest. If you're a breakout trader, you're probably waiting for a move through 85. If you trade off this overbought, oversold indicator that we talk about here, you're starting to pay attention to JD. I mean, I know I'm going to pay attention. I'm giving it a good look today. Obviously, it's in my note. It's here on the show. Kind of watch how the market opens here this morning, see how JD trades within that context. But this is an interesting name that plays on strength in a different geography, which we want to be mindful of. Let's look at our sector tracker now, movement of the last 5 days. Comms and Utes, only two that are higher over the last 5 days of trading. Industrials and energy and materials at the bottom of the list. So our cyclical plays have come under pressure here in the near term with the market, and we'll continue to watch those, right? We've liked materials since June. Here we are in October. So if it makes sense to not like them anymore, we won't. Same goes for the industrials, but they're going to need a good look. Tech, right? I talked about tech in my note yesterday, and it's getting a lot of attention. Obviously, David Einhorn is calling for the top in tech. He actually said September 2nd was the top. Remains to be seen. It's going to get a lot of attention. Successful hedge fund manager trying to make a big call like that very publicly. We'll see how it plays out. I mean, he called the market a bubble back in 2016 also. So you never know, right? A lot of people attach a lot of attention to what these folks say with good reason. They, for the most part, have extremely successful track records. But, would I go dump my tech positions because David Einhorn's calling a top? No, I mean, I'm going to need to see the trends break down before that. And I don't call tops and bottoms, right? I freely admit that as a trend follower, I'm going to miss the top and I'm going to miss the bottom. So for those of you who are listening to me for a long time, you know that. For those of you who are listening to me for the first time, I'm sorry to burst your bubble, but I'm not your guy for calling tops and bottoms. It's not going to happen. I promise you that. And if it does happen, it'll be purely by accident and luck. And not in any kind of repeatable process. Because if you think about a trend following, there has to be a trend to follow, right? So by definition, something that's at a 52-week high or in an all-time high is in an uptrend. So I'm not going to be bearish on it, right? So I'm not going to call the top, I promise. Let's look at our industry in focus. I will pay attention, though, to dynamics that are shifting near tops and bottoms, and that's different. And one of those areas is actually banks. Over the past 6 months, the banks have underperformed the S&P by 37 basis points. But, power bar ratio is very strong. 55 bulls, 4 bears, number 3 of 21 subsectors. If you're looking for opportunities within the banks, take a look at Hancock Whitney do work there, Synovus, SNV, and Amyris, ABCB, all with very bullish shaking power gauge ratings. Now, what I have said is that I'm intrigued by the financials. I'm intrigued by the fact that downside relative momentum seems to be waning. Right. And you can see that here. Right? Look at the underperformance. Still an underperformer, but less intensity. And that's what intrigues me about the banks. Let's dive in here now. Movers and shakers. Xilinx being bought by AMD. F5 earnings. Nielsen possibly selling their consumer goods biz. I'm speeding up here because I'm behind time. Tiffany coming to more settled terms in their deal with LVMH. That stock higher, and Twitter higher with the social names. On the loser side of the board, Franklin Resources misses on the earnings, down 13.6%. Dexcom, pre-announcement that including the announcement that their COO was leaving. RTX, Lilly, and PFG all reported earnings that disappointed the street. Those stocks were lower yesterday by, call it 6.3 to 7%. So a lot of puts and takes in this market. And, you can kind of see it in the sentiment gauges too. It's fascinating, right? The 13-day moving average of the equity options, so equity positions, the put call ratio, still at levels of excessive greed where we have been since June, really before June. But the breakdown was right here, late May. And then we've been stuck down here. So options traders continue to gravitate towards call options, right? In individual names. It's been a dynamic for a while. And it's been, it hasn't been a good contra signal, right? It is the environment we're in, so we'll continue to look at it. But it has not been a good contra signal. And what's interesting to me is that it's playing out while the VIX stays elevated, stays above 20, and for the most part above 25. Now, we got a big spike yesterday on the sell-off in the S&P 500 and over the past couple of days, but really two opposing views here. And it's fascinating, but I guess maybe not if we go back to those charts of the SPY, the Qs, and the IWM. And what are they doing? Chopping, consolidating, going nowhere. Right? So within that framework, I want to use oversold conditions to identify good names. But we're always going to manage risk, right? You always have to have a risk management process, right? If JD looks good to you and you want to buy it today, that's great. You know where your stop is, though, right? Presumably for your time frame, for your risk tolerance, I hope. I know that if I pull the trigger on JD today, it will only be after I've established my stop level below which I admit that I'm wrong and get out of the way, reevaluate, look for another opportunity. But here's why I'm looking at it. Look at this emerging Asia Pac, right? GMF is the ticker symbol here, emerging Asia Pac, right? That's not consolidating. That's breaking out. That's moving higher. That did already consolidate and is now moving topside above the 50-day, above the 200-day, momentum in bullish ranges, and a potential base and turn higher relative to the S&P 500. So that's something I want to pay attention to. At the same time, I told you on Friday, Bitcoin was going to be on everybody's radar. It's now more overbought, and we're watching for this breakout here. Now, I am long in a long-term account. I do not trade it. So I like it. Would I necessarily chase here? Nope. I would need a break above 14,000 to get me even more excited. So take us for a test drive. I'm back with you tomorrow. Have a great Wednesday, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.